Good afternoon. Just doing a kind of weekly update for Bitcoin here since we are going into the first full week of November with lots of craziness looking at, and it is Monday, so we're going to go ahead and start doing a weekly look at Bitcoin going forward. It is week 45 and lots to talk about here. So the first things we want to make sure that we keep an eye on, obviously, presidential election in the U.S. Because of this, expect potential volatility, market irrationality. There's a lot of de-risking going on, especially from the institutional traders. And then the next big one, obviously, is on Thursday. We have the federal interest rate decision. These are going to be significant things to look at. This is a definite expectation that they're going to be lowering by 25 basis points. Anything higher than that starts to trigger major warning levels for a potential recession. And then besides that, there's not a whole lot else that we really need to look at. But again, this is a major volatility week. We're going into the US election. We don't know if it's going to be a Trump blowout. We don't know if it's going to be a really tight race. It's all up in the air. And there is still an expectation of a potential euphoric pump if Trump wins. But again, the uncertainty is there. And when there's uncertainty, there's fear. And when there's fear, there's the potential for high volatility movements. So with that being said, looking over at some Bitcoin specifically, funding rates generally are positive. Again, positive funding rates definitely influence a potential for significant downside, but it's not massively down. It's not over 0.01, which it has been for the last couple of days. It's broken down pretty significantly, but generally still positive, so influencing market makers and liquidity providers to continue driving price lower. Looking at the local long-short ratios just based off of what we've been doing, as we saw last week, we saw significant changes in the direction as we were majority short, very significantly so, until we started breaking structure on Thursday the 31st. Since then, we've seen longs come in aggressively. We are now definitely majority long versus short, so people are trying to step in to buy the dip. It's still not critically long-short ratio as far as like a potential reversal, but it is significant. Now, we've had a little bit of a localized up move in the local lower time frame price action with the long shorts. So again, there's some aggressive attempts to buy. We want to see some regains of level, but there's definitely more longs and shorts in the market, which means we can punish a lot of people if we go lower. Looking at the liquidations, I'm looking at a higher time frame. The big thing is we have massive amounts of liquidity from this and above, from the highs that we went at from the weekend at 73K. We have significant liquidity breaking us potentially all the way back down towards 64K with a huge pocket down here, 61.8. Historically, these major pockets are definitely swept, just like we did back in October before we have any type of potential continuation. Looking a bit lower time frame, just on the current weekly outlook in relation to liquidity, we're doing some pretty deep drives into everything we effectively did last week, and we're seeing a pretty thin book on the lower time frames. So there's some good stuff to retest higher. We've got some stuff at 70.3. 70.3 is also the November open, so I would expect any local regains of level, especially above 69.5. A quick little pop to that November open is definitely expected. To get significantly back into the upside zone, we want to see high time frame closes back above 70K, but for the time being, it's still got some downside priority. It looks a little promising locally, but again, we're not clearing significant structure. Finally, the COT report. The big thing with this is we have significant amounts of increases on the dealer side, longing this upside structure, and then leverage funds are still massively, massively short. So the total of these positions, because we're talking about 5 contract Bitcoin size, it's over $8.5 billion. So there's definitely enough short liquidity if we want to grab new all-time highs and continue popping to the upside. That being said, follow the dealers. The dealers are usually right, and the asset managers have significantly reduced exposure and are usually wrong. So it still looks good. We could still hold levels and price as long as we don't lose some critical lows. Looking at the local stuff on volume. So we saw that significant change in volume stepping in on the candle, on the charts here. as of Thursday the 31st around afternoon. So significant amounts of short volatility, short volume coming in, breaking that upside structure in basically 1 4-hour candle. And since then, we've had one attempt to regain, which was forced down aggressively, and still pretty decent amounts of bearish liquidity up until the open today. So here we are actually seeing pretty neutral stuff. There's some potential for bullish volume stepping in, which is good. And as long as we're holding good levels above the 67.2 and even these high volume zones at 66.6, we're still looking at a potential hold of level. If we do break below this point of control and start losing this significant support, you must start targeting these low volume areas below us that could easily take us back towards the low 60s, and the Q3 and Q4 opens at 62.7K and 63.3K. Going over to the liquidations. So in this structure here, we definitely have something to look at with the gain of 70K to test that upside liquidity. There's some decent amount of high leverage stuff, these 100Xs and 50Xs, that can get us back up to retest some of this high structure. There's this liquidity dead zone once we start clearing back to 72.5. And historically, liquidity dead zones are areas that you target for potential big reversals. Now, if we do the upside move first, I'm almost expecting us to reject the high. But if we do start grinding back to the upside, start flipping that long short ratio, we could definitely see a pop and a continuation of the upside move. The local stuff, the local lows that we've created, we actually have some good structure here at 68K. If we do lose 68K, it's likely we test 62.7, and then we start grinding into this high leverage, long liquidity below us down to 65.5. The longer we drive down into this level, the higher chance that this liquidity dead zone will fill out, and effectively these two zones of liquidity will then connect, allowing us to target much lower in the structure. However, that being said, we are testing things bullishly locally. As long as we hold this low, we want to see if we can get some regains of level, get us back above 69K, get us back above 70K, and we can start filling out that high leverage short liquidity above us. I would expect that if we do move down first, then the inverse is that we're going to have a really strong upside drive. If we go up first, I'm expecting us to reject until we have effectively higher time frame gain of level. Finally, looking at the general TA for this zone. So my expectation is really simple. We have a big supply zone above us, 69.6 and 70K, as well as 70.3K, which is the November open. All of this structure is saying that this is the major resistance to effectively test. If we do gain that level, I'm expecting price to come to Q2 and then go back up to test this high structure where we have high time frame resistance and everything else. Any 4-hour gains of this high time frame resistance, you are making new all-time highs, without a doubt. The local structure is very simple. We're broken down. Longs are coming back in. We've got some downside priority. And as long as we're holding the 68K structure, it looks okay. It doesn't look great, doesn't look terrible. But down here around 68K, the previous weekly open, there's a potential for us to hold structure. So the real break and the real downside targeting, especially of high liquidity at the low 60s, should only come into play once we start losing the 66K zone. There's also a very high time frame parabolic move on Bitcoin, and we're still holding it. We're not broken down. If we do break that low, we are breaking a very big parabolic move that you can effectively see on the daily time frame if you go and look at the August lows to the current price action. So what I would say here very simply is we have the US elections, we have the federal interest rate decision. If you're playing low time frame stuff, knock yourselves out. I'm waiting for a bigger move since we've done the big test, the upside. We've got the nice little failure, the short retest to go lower. It is a completely fear and uncertainty driven market right now. Wait for the elections to settle. Wait for some clear price action. You're broken back down into range structure from the previous stuff we broke out of. This parabolic move was broken aggressively, and we had an awesome opportunity to short that parabolic break. So for the time being, like I said, don't over risk yourself. Don't overexpose yourself. You know, this week is going to be the big determiner that should carry us all the way through the end of the year. And we're all waiting to see what happens with the US elections. We want stability. We want some reduction in the volatility, and we want some more, sane and rational price action in markets. So that's that. Take it easy, and catch you later.